Let's start with the British elections. In today's business news, Stephen Carroll is here. Welcome, Stephen.
Hi, Shanna.
The economy has been a big focus of this campaign.
Yeah, I mean, the election adage is it's the economy stupid, and this is no exception in this election. The UK has had a reasonably good run in the past 5 years. It's managed to cut its deficit in half and return to reasonably strong economic growth. While many jobs have been created, there's concern that many of them are only part-time or on a 0 hours basis. That'll be just one of the economic challenges the new government is going to face, as Kate Moody now reports.
And on the streets, the state of the UK economy has emerged as a major battleground in the run-up to Election Day. Since taking office in the depths of recession in 2010, David Cameron has overseen 5 years of austerity and spending cuts, which he says have put the country on the road to recovery. During that time, 1.8 million jobs have been created. The unemployment rate fell to 5.6% in the beginning of 2015. The government's critics point out that many of those jobs aren't full-time. So-called zero-hour contracts, which aim to provide flexibility in the workplace, have been attacked as exploiting workers. Wages haven't grown at the same pace as the job market. Labour leader Ed Miliband argues the average salary has dropped and the income inequality gap has widened. The incumbent Conservative Lib Dem coalition points to renewed economic momentum under its leadership. The UK's overall GDP growth of 2.8% last year was among the strongest in Europe. But that pace unexpectedly slowed in the first 3 months of 2015, and the IMF has warned the recovery is far from stable. Balancing the budget will also be a top priority. The current government has nearly halved the budget deficit to 5.7% of GDP since taking office and wants to keep going. The IMF has again sounded a cautious note, predicting that neither party will be able to balance the books by 2020, a sign of the challenges facing the victors as they take control of the world's fifth largest economy.
And Stephen, the markets will also be watching closely what happens in today's vote.
Yeah, and the currency markets is a really interesting one to watch when it comes to this, because the value of sterling is quite strong at the moment, relatively speaking, at least to the euro, which is quite weak. This is the picture, what's happening on the markets today. £1 getting €1.34 and $1.52. Down slightly, as you can see, no great movement. But if the political uncertainty continues for a long time after this vote, we could see a situation where sterling could fall, because that's how the markets would react to that. Although a poll of Reuters economists that was published yesterday says they don't expect any dramatic movements for the moment. Anyway, on the stock markets, European shares opening down today. The FTSE 100 in London is down 0.4%, as you can see at the open. Lots of companies news moving the markets, particularly here in France. We'll get to the details of those in a moment. Over in Asia, another dramatic fall on the Shanghai Composite in trading today. It's down over 6% on the week, but it is up over the year by over 20%, but it's been having a particularly bad week, down over 2%, as you can see in trading today. The Nikkei in Japan, back after its holidays. They've been closed the past 3 days, and it's down 1.2%.
Meanwhile, the price of oil keeps going up.
Yeah, the Brent crude index close to the highest level it's been so far this year. That's being pushed up by a fall in US crude oil reserves announced on Wednesday. Brent has rallied by more than 30% since hitting a low in March. You can see it's down slightly in trading today, but a barrel of oil trading at over $67 a barrel, which is far higher than we have seen it in recent months. The price of oil follows closely what the perceptions are of market supply. Let's listen to the oil industry expert Francis Prow.
The reality is oil companies are reducing their investments. They're also drilling less in the United States, so in time it will have a negative impact on the oil produced in the world. Therefore, the prices have started to rise on global markets, notably London and New York, in anticipation of further production declines.
Let's move on now to look at some of the day's other business headlines. The troubled French nuclear giant Areva is set to cut its global staff costs by almost a fifth as part of its restructuring plan. The biggest reduction will be in France, where the budget will be cut by 15%. The company hasn't put a figure on any job losses, but the French media is reporting it's likely to be around 3,500. Areva recorded record losses of almost €5 billion last year. Siemens in Germany has announced it's to cut another 4,500 jobs. Almost half of the positions will go in Germany. That's on top of 7,800 cuts announced in February. The engineering giant reported after-tax profits of €3.9 billion for the 3 months to the end of March, but more than 3 billion of that came from the sale of assets. And the French technology firm Alcatel-Lucent has reported net losses of more than 615 million euros in the first quarter. That's more than 3 times the figure they reported for the same period last year. The company is in the process of being bought out by Nokia. Shares in Alcatel-Lucent have fallen by more than 30% since that tie-up was announced, but they're up over 4% today in Paris.
Finally, somewhat of an embarrassing turnaround at the top of one Indian company. A chief executive sent a blistering resignation letter.
But he's still working with the company. The company's the property website housing.com, and if you want to prove that you can really come back from almost anything, take a look at this quote from the resignation letter the CEO, Rahul Yadav, sent to the board members. He said, "I don't think you guys are intellectually capable enough to have any sensible discussion anymore." He went on to say that he didn't want to waste any more of his time working for these people. So as you imagine, you thought he was gone, but then less than 24 hours later, he said after he released a statement saying that he was staying with the company after frank and healthy discussions with the board. I think that's a euphemism.
Maybe he got a raise.
Well, one can hope. The company's
Even though he probably didn't deserve it after that email.
The company's been touted as one of India's really big success stories, though, in the startup area, valued at more than 200 million euros. And Mr. Yadav, still the CEO.
Very interesting. Look at that. Well, maybe, anything can happen, I guess. Thanks so much, Stephen Carroll there with the business news.